Welcome to Tax File. I am your host, Laure Bala Hassan, and today's episode is filled with rich insights you won't want to miss. We'll start with a roundup of the latest tax news, keeping you informed on the most relevant updates. In our Did You Know segment, we'll reveal some useful tax facts. You'll also hear from the public in the Vox Pop segment as we capture diverse opinions on pressing tax issues. Then, we'll break down those perspectives further in the Knowledge Zone, offering clear explanations and deeper context. Our Professional Insight segment brings in expert voices to help you make sense of complex tax topics. And to wrap it all up, What's on the Net features your questions and comments from our social media platforms with our responses. It's going to be an enlightening journey. Let's get started. And now, the news. The Society of Women in Taxation, SWIT, has held a one-day sensitization program for market traders at the Garki International Market, Abuja, themed Understanding the New Tax Laws, What Every Trader Needs to Know. The event, led by the National Chairperson, Dr. Caroline Indubisi, aimed to educate traders on recent changes in Nigeria's tax legislation and their responsibilities under the new tax regime. Ejura Etu Okbanachi reports.
Speakers from the Society of Women in Taxation, the Federal Inland Revenue Service, the Joint Tax Board, the Chartered Institute of Taxation in Nigeria, and District Society took turns to explain key provisions of the new tax laws, their implications for traders, and practical steps for compliance. The interactive session featured a robust question and answer segment where traders sought clarifications on tax procedures and expressed their commitment to becoming more informed and compliant taxpayers. Members of the Association of Women in Trade and Agriculture, AWITA, also participated in large numbers, demonstrating strong interest in improving tax awareness and compliance among market women.
The Executive Chairman of the Federal Inland Revenue Service, Dr. Zak Adedeji, has reiterated that the federal government's ongoing tax reforms are strategically designed to boost internally generated revenue (IGR) and strengthen subnational economies across Nigeria. So Ateku takes the report.
Speaking in Kano at the Northern Revenue Conference, Dr. Adedeji explained that the reform agenda focuses on enhancing efficiency within the tax administration process, promoting fiscal sustainability, and ensuring that revenue mobilization efforts translate into tangible benefits for citizens at both federal and state levels. According to him, the reforms are part of a broader effort to build a fair, efficient, and technology-driven tax system capable of supporting sustainable national development. He noted that with the right policy framework and institutional collaboration, Nigeria can achieve a more stable and transparent tax regime that encourages compliance and supports economic growth. The conference themed Readiness, Reforms and Digital Transformation brought together key stakeholders from the public and private sectors to deliberate on innovative approaches to improve revenue collection and governance.
Meanwhile, the Executive Chairman of the Federal Inland Revenue Service, Dr. Zak Adedeji, recently received a delegation from the Mozambique Revenue Authority at the FIRS headquarters in Abuja. Aisha Abdulkader reports.
The team, led by Ines Kumban Inhoche, Executive Director of the Extractive Industry Taxation Unit, was in Nigeria on a study tour focused on knowledge exchange and collaboration in extractive industry taxation. Dr. Adedeji welcomed the delegation and emphasized the importance of African cooperation, data sharing, and regular engagement to develop practical solutions that can strengthen the continent's economic infrastructure. He reaffirmed Nigerians' readiness to support Mozambique, noting that the FIR's long-standing experience in extractive sector taxation positions it to offer technical assistance and guidance in identified areas of need. The visit, he said, underscores the shared commitment of African nations to improving revenue systems and promoting sustainable development through collaboration.
And that's a wrap on the news. Let's join Mariam on the Vox Pop segment.
Hello and welcome. My name is Mariam Julde Adura. We bring you greetings from Bodija, Ibadan, the Oyo State capital. Today we'll be looking at the extent to which federal and state bonds are taxable. Come. To what extent are federal and state bonds taxable?
To a particular extent, and that's because government bonds are derived from the government, so any income that goes from the government cannot be taxed. Yes.
Federal and state bonds are tax-free because it's like a pepper seller or apple seller buying government bonds. In that sense, they are borrowing government money to fund some projects, and so the returns they get on it is not taxable, and then even the capital will be returned to them at the maturity of that bonds. So it's tax-free.
To what extent are federal and state bonds taxable?
According to Section 164 of the Nigerian Tax Act of 2025, it states that any income you gain from federal bonds and state bonds, that means the gain you gain from it is not taxable at all. That means you are not going to pay tax on it.
It depends on the where the bond is shared from. If you purchase a bond from state, which means the states, that is where the tax will be shared from. And if it is the federal government, the tax is exempt.
So tax is exempt for federal bonds, but for state bonds
it's not.
Oh.
Yes, because it depends on, for example, you are living in Oyo State and you are from another state, which means it's not exempt from tax.
To what extent are federal and state bonds taxable?
I don't really know, but in the information I had previously is that they're not taxed, especially federal bonds, and but out of the local government and the state, I think they're taxable. I read something somewhere that that said in January 2nd, 2012. The federal government gave an order that they were all exempt, but that was for 10 years cap, which ended in 2nd January 2022. So after that, the federal bonds were not taxed any longer, but the state and local government were being taxed. So, but now I don't know the actual position and what the new law stands for.
Did you know that income from state and federal government bonds are tax-free? For more information, please visit www.firs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into interesting conversations had on the streets. I remain your host, Ashu Abe. The question today is, are income from federal or state bonds taxable? Based on the current tax act in operation, income from most government-issued bonds are exempt from tax in Nigeria. In 2012, the federal government issued a tax exemption order, effective 2nd January 2012, granting full exemption on income earned from federal government securities. This exemption has been consistently reaffirmed in subsequent finance acts. For federal government bonds, under Nigerian law, income, interest, and gains arising from federal government securities are exempt from taxation. This includes Federal Government of Nigerian bonds, Federal Government of Nigerian savings bonds, treasury bills, Nigerian treasury certificates. And for state government bonds, the exemption also extends to state government bonds, provided that these bonds have federal government approval and are issued in accordance with the relevant provisions of the Investment and Securities Act. When these conditions are met, the following are exempt from tax: interest income from state bonds, profit or gains from disposal or redemption of these bonds. Exemptions apply to both individuals and companies, whether the taxpayer is an individual covered under the Personal Income Tax Act or a company covered under the Company Income Tax Act. These exemptions still apply. Thus, the income is excluded from personal income tax, company income tax, and withholding tax. Over to you, Laurie.
And now to our professional insight segments.
Generally, when you look at the reform, it's geared towards simplifying the tax system. It's geared towards making the tax system fairer, making it more equitable. So what actually happened is to have a system where every taxpayer is able to pay fairly and comfortably. So what has happened is that we now have a system where it is not about increasing tax rate any longer. It's about expanding the tax base. And what it means is that, as a matter of fact, if you are a taxpayer and you have been complying, there is nothing to be afraid of in this tax reform. So the system is bringing in fairness and equity. And what are we talking about? We are making sure that those that have not been complying, this reform will make them to comply. And those that have been given extra burden, government is trying to lessen the burden for them. For instance, the threshold for exemption is increasing. Exempted item as a rated item, other VAT, have increased. And what is the implication? Meaning that more products are actually exempted from VAT, and the burden on the taxpayer will be less. When it comes to automation, you now have a provision in the Tax Act that talks about VAT fiscalization. And what that's about is to support the e-invoicing effort of the government. And what is e-invoice all about is to create a transparent system where all the transactions of taxpayers are now visible to the tax authority. And when transactions are visible to the tax authority, what happens is that there will be no hiding place for those taxpayers that wouldn't want to comply. So by the end of the day, automation using Tax Promax, automation using VAT fiscalization system, and all of those automation systems will help us to make sure that everybody and every taxpayer pays what they are supposed to pay. By that now, we'll be able to have vertical equity, we'll have horizontal equity, and there will be fairness in the system. One of the things the reform has helped to achieve, and from January, this becomes very clear, very obvious, is that the number of taxes that you expect a taxpayer to pay, the number has reduced. And what are we talking about? When you look at development levy, for instance, that we have in the NTA, that is Nigeria Tax Act, it is coming to replace about 4 taxes, about 4 earmark taxes. What are they? We have education tax, we have NIDA levy, IT levy, we have the NACINI, levy, and we also have the police levy or police fund. These 4 taxes, for instance, have been put together in one called development levy. They will be put together now. Taxpayer just calculate it at once 4%, and it is now the responsibility of government to now distribute this 4% to its relevant components like education, cybersecurity issues, like IT levy and what have you. So we have taken the burden from the taxpayer to the government, and that will help to make life easy for the taxpayer. That is one of the dimensions. The other dimensions again that will interest you to know is the capital gains tax. Instead of you calculating capital gains tax as a tax type, it has now been added to income tax computation, meaning instead of me calculating personal income tax and also capital gains tax separately, they will be put together as one. So that unification helps to reduce the burden on the taxpayer. And for companies income tax will now take over capital gains tax that used to be on its own. So from January 1, these taxes are coming together. For instance, the 4 taxes are going to be filed as one and the payment to be one. So instead of filing capital gains tax, it's going to be part of companies income tax, and you are going to file 1 instead of 2. So these are examples of some of the changes we have brought into the tax ecosystem, and they are all geared towards making life easy for tax. They don't need to cram the rate for this, the rate for that, and all of that. So one rate now covers many things. Having a simple, transparent, and efficient tax administration system is a product of institution. And so government has now come up with improved institution from different dimensions. For instance, we have TAT, Tax Appeal Tribunal, that is responsible for redress mechanism. Redress mechanism in the sense that a taxpayer has issues with the tax authority and they are not comfortable with a particular assessment. They have the opportunity of seeking redress at the TAT level. So what has happened in this reform is that yes, TAT has been there, but it has been empowered, it has been strengthened. So they are going to have a better institutional system. And also we have the tax ombudsman that is also there to address the complaint of taxpayers. That one does not involve seeking redress at a court-like system like TAT. TAT is a court-like system, but tax ombudsman is there to respond to the complaints from taxpayers. So it's more or less an independent agency standing between taxpayers and tax authorities, and they are actually there to resolve some complaints that can emanate from the tax processes with the tax authority at the federal, state, or local government level. And of course, we also have the JTB that is, becoming GRB. Joint Tax Board is going to be called Joint Revenue Board from January. And it's not just change of name, it's also improvement in the powers that they carry. Before now, it has been argued that JTB can back but cannot bite, right? But as from January, it is believed that the law has strengthened GRB to be able to not just back but bite, and help us to strengthen the tax administrative system at the subnational level, where you have so many levies, so many taxes that are burdensome on the taxpayer. Technology is at the center of tax administration. And of course, the general saying now is that, data is tax, data is revenue. So technology helps us to get data about taxpayers. And so it now becomes very important for us to not just, include some provisions about technology in our law. It's also important that we pay attention on how we can implement or deploy those technologies in a way that will make life easy for taxpayers. One of the provisions we have in the tax law right now is on VAT automation, what we call VAT fiscalization system. And what it means is that, FRS is able to connect its system with the system of our taxpayers. And what it means is that FRS will be able to see what is happening in companies. And so as a phased project, what we are doing now is to start with large taxpayers. We are connecting FIRS system to their system so that all the transactions they are doing, we are able to see them real-time online. And so instead of just waiting for them to give us data, we already have data before the end of the year. And so we will be able to monitor, we'll be able to review the taxes they have paid, and there will be no opportunity for anybody to hide. That is one of the dimensions. Another thing that we have also done in the law is to see how technology will help us in filing and help taxpayers in filing. For instance, FIRS or tax authorities are empowered to communicate with taxpayers using email. So if I send an assessment to you as a taxpayer using your email, it is acceptable in law, right? So those things are going to make life easy for both the tax authority and the taxpayer. And the taxpayers are able to now use Tax Pro Max to file their taxes, to pay their taxes from the comfort of their home. The support comes in form of making compliance easy for them. The support comes in form of incentive to taxpayer, where we have right now we have small companies with threshold of 25 million turnover exempted from tax. The new tax law, the Nigeria Tax Act and Nigeria Tax Administration Act have actually increased the threshold, and it's believed the threshold should be 100 million naira. And what is the implication? That if you have a turnover of up to 100 million naira, you are seen as a small company and you will not pay tax. And what is the advantage? If you are not going to pay, for instance, 3 million naira in taxes, that money can go back to your business. It can help you to increase your capital base, and you'll be able to make more revenue. The business can grow to a level that you are now empowered to pay tax. That is one dimension. That is an incentive dimension. There are also other areas that life has been made easy for taxpayers, like exemption, VAT exemption, VAT zero rating. Those people that are earning salary, that are supposed to pay per year, right? The system now has created more threshold for people to be exempted. Those that are earning around minimum wage of 70,000, 75,000 are going to be exempted from payment of taxes. So it is believed that if somebody is earning so little, you should allow the person to be off the tax net, so that the person can actually use that one to be able to grow to the next level. And talking about compliance, when you are able to improve institution, you are able to make life easy for taxpayers, you are able to make life easy for them to register, to file, to pay, and all those things have been simplified for them. The law is easy to understand. Compliance is believed to improve.
Over to Swateku for what's on the net.
Good day and welcome to What's on the Net. My name is Joyce Swateku. At Olax, one is asking, can you please fix the issues with your portal? It's been over 5 months and I still can't reset my login password. At Olax 1, kindly visit the nearest tax office and file an update form for the reset link to be sent to your inbox. At Kainde Owolabi is asking, please, I would want to know, can poultry farms register as limited liability whose turnover is less than 25 million pay tax? Thanks. At Kainde Owolabi, yes, poultry farms can register as limited liability companies and obtain a tax clearance certificate. If their annual turnover is below 50 million naira, they won't pay company income tax, but they must still file annual returns. Failing to file on time attracts penalties, even if no tax is due. So filing your annual returns is compulsory for every registered business. Over to you, Lowry.